I'm recording this video on Sunday the 6th of March 2011, and I said I'd do something at the end of the week to do with Forex and FX markets, and this is really in response to a video this week on Bloomberg, an interview that Betty Liu did with John Taylor, FX Concepts. He's chairman and CEO, and they're the largest FX hedge fund in the world. And I kind of broadly agree with what John Taylor's saying. He's saying there's going to be a continuation of the uptrend in the euro into June, peaking at about $1.45. He's saying there's going to be a continued rally in the stock market, and I'm starting to turn bullish on the S&P as well, thinking that we're going to continue this kind of breakout to new highs, and that will kind of be a continuation. This is the pullback in an uptrend into an end of trend warning signal on the daily chart that I've talked about in the better sine wave. And so I'll just show you what I'm seeing on my FX charts that kind of support that. We're clearly at critical kind of breakout levels for all the major kind of currencies, and let me show you what I'm seeing on my daily and weekly chart. So here's in TradeStation weekly chart of the euro. This is I'm tracking the CME contract that gives me all the volume data that I need to for the better momentum indicator, primarily for the volume data and for better pro-am. So this is rather than using the kind of the cash markets, which are kind of restricted in terms of the volume that you can analyze. But anyway, on a weekly chart, you can see that we had this sell-off into mid last year, middle of 2010. We had exhaustion selling signals, and this tiny little Rambo pattern right at the bottom here, showing that the amateurs were being wrong-footed, kind of shorting $1.20. I don't know if you can remember. I mean, I talked about this at the time, the kind of the hysteria around these markets, and you can judge it by the news coverage, and I've shown you how to do that on using kind of Google News searches and so on. But you can feel it in the market, and we had kind of hysteria here. We also had kind of hysteria back here when we were up at 145, and the flip side on the dollar index and so on. We've also got a lot of hysteria, by the way, to do with the crude market. So just bear that in mind. The crude story is going to work out over the next 2 to 3 months, but there's certainly kind of hysteria with the Middle East and the crude story at the moment. So we bottomed out here at $1.20 in the euro. We kind of rallied since. Everybody kind of took profits up at $1.40, $1.45, and then we came back into this kind of pullback level. Now, the first thing to note is that when we kind of bottomed here, we formed a pullback. We then bounced a little bit, formed a pullback in a downtrend signal, and we went to make an end of trend warning signal in this direction on the weekly chart. But the key little bar here is this amateur down bar kind of testing the lows. Sometimes the market doesn't have time to make a really nice kind of cyclical end of trend pattern, and we break up through the pullback level into an uptrend essentially. And so at this level here, people were so anxious to get on board this uptrend. This little amateur down bar at this point, the highs got taken out, which was a cyclical resistance level. We kind of broke to new highs there. So we started into an uptrend at this point as soon as we broke above that cyclical resistance level. So we came into $1.40, and you can see all the professional blue bars at the high, taking profits, stopping volume, no to bar, and profit taking, and so on. And we'd come back down. Now we come back down into a cyclical support level here, which is a pullback level. We've got bullish divergence signals. The professionals came back in at these lows, and we've rallied since then. And then on better momentum, you can see it was the flush signal here, essentially flushing out all the sellers at this point, and therefore we've rallied from here. But in order for us to see a change in trend, to see the market kind of go the other way, we need to see almost a mirror image of the same things. This amount of selling volume we need to see on the upside. We need to see this kind of type of volume of buying volume on the upside, which is kind of all of these players who kind of got long at this point kind of getting short, and all of the amateurs kind of being wrong-footed at this point. We need to see that same kind of activity at the upside. So now we've broken through a cyclical resistance level, which was an end of trend warning signal. So we're back into an uptrend here, and we've not seen any of the kind of the trifecta in order to see a change in trend. Yes, we've got a cyclical turning point that we've busted through, but we've not seen exhaustion buying at this point, and we've not seen professional activity at this point. So there's not kind of confirmation. We've only got one of three signals here. We've not kind of got confirmation from the other signals to suggest that there's kind of a change in trend likely to take place. And I need to be seeing this kind of flip side, the mirror image of this type of activity on the upside to suggest a change in trend to the downside. So, likely we're going to get a continuation. And because this is we've spent a lot of time kind of basing around this breakout level, we now broke out through this level, we could well continue on. And so John Taylor's saying, well, the next stop is 145, which is kind of historically, where we kind of found resistance last time. And the next couple of months is going to be key into building the breakout to that level and seeing what happens there, whether we get kind of professional activity at those highs and some kind of dumping of all of this volume. Now, if we just come down to the daily chart of the euro, you can see this kind of testing back down. This is this level here, this pullback on the weekly level at $1.30, and here it is at $1.30 what we actually saw. So coming on the downside here, we had an end of trend warning signal and a second cyclical turn after end of trend. You can see in this second cyclical turn all of these blue professional bars coming into these lows. It was a flush signal on this time frame, the daily time frame, flushing out those sellers, and you can see it was kind of really strategically placed. The professionals came in first of all at this level at $1.31, $1.32, and then we came back, we broke slightly below there, which freaked everybody out, thinking we were going to make new lows. No, the professionals were coming into those lows. They held that cyclical turning point, flush signal here, and then these professional bars kind of get this move going. This is jumping the creek. This is getting on board this uptrend move here. This little pullback that we had over the last couple of weeks, this is kind of perfect trifecta here. If I just blow this up, bingo, right, all on the same bar. Bullish divergence signal, very little selling on better momentum, cyclical turning point, and professional bar. So that's kind of a trifecta kind of coming into those lows. And if you see all of the the selling, the flush signals and so on, we need to be seeing the same type of pattern, almost a symmetrical pattern on the flip side. The amount of buying that we had at this point here was just getting this move going. We need to see that type of exhaustion buying, the similar type of levels that we had in terms of selling here on the upside to signal that all of that volume that was taken out on the downside here is being exited and distributed on the high side. So now I know we've got a cyclical turning point kind of approaching on the daily time frame. We're at critical kind of levels around this 140 type level. So let's see if we kind of break into an uptrend. If we start breaking an uptrend of euro, that could well be the same type of thing, breaking to new highs on the S&P, and people saying, well, actually there's a lot of good news in the economy and so on. We're going to get this kind of pullback in an uptrend into an end of trend warning signal on the daily time frame on the S&P, and the rally continues. Now, you can see exactly the same kind of patterns. The flip side, the dollar index, 60% of this or so, I think, is contributed by the euro. So, you can see exactly the flip side of this on the dollar index. This is a weekly chart of the dollar index. This is the exhaustion buying that we had here, kind of mid-year. Exactly the flip side of the weekly chart, the exhaustion selling that we had with a flush signal here. If you go to the dollar index, you've got the reverse. You've got the exhaustion buying and the flush signal here. Previously the professionals kind of came in and caught the lows here at 78, 77. We had Rambo patterns again, just like we had on the weekly chart of the euro. Bang, there. Just at the upper the highs, the amateurs kind of getting wrong-footed. We've gone the other way. The first time we came into the lows here, we've had professional buying at this point. Come back, flush buying signal, I beg your pardon. So flushing out the buyers at that point, and we're back down to making new lows. Now we've broken our end of trend warning signal here, just like we've broken our end of trend warning signal on the weekly chart here. No blue professional bars kind of come in this time. We had blue professional bars come in here, but in terms of price, volume buying at these lows, it's not been at an extreme yet. We've not had that kind of extreme selling at this point to signal everybody's sold, and all of a sudden we're back down at this critical support level. So if we start to break this 76 level on the downside, we're into a continuation of this downtrend in the dollar index. And then if we go to the daily chart, very similar pattern that we saw before. Kind of exhaustion buying, flush signals here, all of this professional volume up these highs. They kind of get this move going on the downside here, kind of rushing for the what's falling through the ice at this point here. Now we're back down at a critical level down here. We've got a cyclical turning point. We're starting to move through here, and I start to see these blue professional bars at the lows. Now we've not got kind of exhaustion selling happened on the downside here. We've not got we've got some bullish divergence signals, but we've not had the kind of selling that we had in terms of the buying on the upside. We need to be seeing a mirror image of the flip side, kind of on the downside here. So is this professional volume kind of breaking through this cyclical support area? Is that actually falling through the ice, and they're kind of getting on board this move? Last opportunity before it starts to crank to the downside, which would be positive for the equity markets. The pound is making a similar type pattern here. We're coming up to a daily, a weekly cyclical turn on the pound here, but the first move that we had in terms of buying volume here took us to this point. This was kind of rushing to get on board of this move, but we haven't seen that exhaustion buying to signal the end of the move. So we need a flip side, mirror image to this type of buying activity on the upside to signal a change in trend on the pound. And again, the last time we kind of came into these lows, we had end of trend warning signal, bullish divergence. We'd already had our exhaustion selling on the downside, professional blue bars coming into these kind of down, couple of down bars here on the pound on the daily time frame, and then we took off to the upside. We've had our end of trend warning signal here, but we haven't had exhaustion buying on the upside. Not had kind of divergence patterns after that buying signal on the upside, and we've only had one little blue professional bar in the last couple of weeks here. We need to see more of that. So we're critical levels here in terms of the pound. We could easily kind of break past these resistance levels into a new uptrend. Aussie, very similar type story. Again, the last time we kind of sold off into the Aussie, this is on the daily chart, it was a few weeks ago. We had exhaustion selling here. We bounced from there. We're up at parity, just above parity. This is psychologically incredibly important for the Aussie dollar to reach parity, because that's been a real psychological limit to how far the Aussie has traveled against the US dollar. And we've not seen the flip side, the mirror image of this exhaustion buying on the upside. And as soon as we kind of crash through those levels kind of significantly, 102, 103, there's going to be a rush to buy that, move to the upside. So that'll be the signal to see that kind of exhaustion buying on the upside. Weekly chart, Aussie dollar, same thing. Last time we came back into 80 in the mid-year. Down here, professional blue bars, exhaustion selling, cyclical turning point. We rallied from there. We've not seen the flip side to all of this selling that we had. The professionals getting in here at this point here. We've not seen the exhaustion buying on the upside to signal the end of this move. And then lastly, just to talk about the commitment of traders numbers. Now, angers me that TradeStation now has this data in the data feed, which is fantastic. But the data is not updating on a we're kind of, the data was out Friday afternoon. This is now Sunday, and the real data is not changed. You can see these last two bars. The last week's data is exactly the same as the week before, so this chart is not refreshed for the latest commitment of traders number. So bear that in mind. However, I've talked about this over the last few weeks in terms of commitment of traders. These are these divergent signals. I'm just showing a weekly chart of the euro here. Divergent signals, commitment of traders versus what the market is doing. And these have signaled really nice kind of divergence levels, bearish divergence here in this decline on the euro, bullish divergence catching the lows here, bearish divergence catching the highs. And this test, the last signal we've had in terms of bearish divergence on commitment of traders was a bullish signal here. We're still at kind of high bullish levels. Remember, I just flipped these charts around in terms of what the professionals are doing. Dollar, same thing. Bullish signals here, bearish here, bullish, bearish here. The last signal that we've had is a bearish divergence signal on the dollar index. Pound, again, the last signal we've had here, bullish divergence. And then lastly, Aussie dollar. We haven't had any signals here to show kind of a bullish divergence. We had them down here back in 2009. The last one was a good year ago, so it doesn't count. But just looking at each of these, the last signals that we've had here have been bullish on these risk trades. So all of a sudden I'm changing my tune, and I can't believe that we might be into continuation of the bull run in the equities markets. This last week we've had our pullback. We might be forming our kind of pullback on the daily chart, leading to an end of trend warning signal sometime in the next month or two. So all of a sudden I'm starting to change my tune in terms of this kind of bigger term picture. I hate the U.S. economy right now. Structurally, I think there are